There are different avenues of investments, such as bonds, shares, and the 401k retirement plans. But at the end of the day, you will not see the kind of appreciation that you get out of real estate as much as you could get from any of these. A lot of these, such as the bonds, like of course it is, if it is a government bond, I can tell that it is, yes, it's a safer bet. But obviously, you also get very low returns. It comes down to shares, share market. You know how volatile that is, and there's a huge risk involved. And you have to follow the market. And honestly, sometimes you have zero control over it because somebody just tweets something, and the market just falls the following day, right? It's the same thing. Like, so even your nest egg that you say in the US, which is the 401k, it is always in shares and bonds. With real estate, it really appreciates so quick. And the best part about investing in multifamily syndications is that when we invest in these properties, we actually negotiate the property purely based on not what the potential is going to be, but on the existing, what they are, what the current situation is. And you start from earning from day one.
Welcome to this edition of Retire Well, Retire Happy with your host, Annie Nelson. An Australian look at reinventing yourself for retirement and getting yourself retirement ready. It's always fascinating getting to know what people are getting up to in retirement, how they are supplementing their incomes, pensions, where they have chosen to live, how they are filling their time, what charities they are supporting, and what adventures they are having. And we'll also talk to experts in their fields, including investing, health, estate planning, financial advisors, and seniors healthcare.
Hi, welcome back to the Retire Well, Retire Happy show with your host, Annie Nelson. And today we have a special guest, and his name is Sanjay Hedge. And he is a fascinating creature. He is the founder and president of the Blue Ring Investors, a company that helps investors pool their money and to purchase high-performing multifamily senior and student housing properties in the US emerging markets. He finds the properties, he vets the deals and manages the assets. His clients make the investment and sit back and collect the income and appreciation that come from investing in investment-grade commercial real estate. Welcome to this show, Sanjay.
Thank you, Anne. I appreciate taking the time to invite me to the show and giving me this time to talk to you.
You're most welcome. So I gather that you're an immigrant to the US and you have become successful despite the fact that you weren't able to work in your first profession. So can you tell us a little bit about how you got to change countries and then change professions?
Yes, I come from India, and I was born and raised in a middle-class family. Both my parents used to work, and they moved to the United States because my sister was married to an American, and they moved over here, and she got to sponsor them. And while she sponsored them, I was still I just turned an adult according to the American laws, and I could not join my parents. So I was back in India studying pharmacy. So that's what my background is. So I had to wait for my visa to come down to the United States, the legal way. So I came here in the year 2001, but without a degree in the United States, I could not practice it over here. So I was married then, and it took me a while before I could get my actual physical green card in the United States, without which you cannot apply for Social Security number, and without that, nobody offers you a job. A couple of things that you learn from experiences: when a man doesn't have a job, he tends to make babies. And so, my wife gets pregnant, and now I'm desperately looking for a job. And I happened to meet a temp agency where I was offered a job on the floor, and I took that job. It was for a company called SAF, which is now a part of Total, the oil company. And I started on the floor at $7.25 and 50 cents in shift premium. I definitely worked hard. I worked almost 90 hours in a week. because I was doing a lot of overtime to make my ends meet. But over a period of time, I always believe that God puts you through certain things for a reason. And over a period of time, I grew through the ranks, and I retired from there as the director of sales for Americas and Asia. Later on, I was hired by another company as the vice president of sales and marketing. So it was a beautiful journey from going from $7.25 an hour to making up to $250,000 in W-2 salary. So I have a lot to thank God for. Every action has an equal and opposite reaction. The one of the drawbacks that is, of course, you make the money, but at the end of the day, you sacrifice your family time that comes with it. So I couldn't tell when my kids actually grew. I have an 18-year-old son, and I just couldn't go to his games. And I have now an 11-year-old daughter, and I'm trying my best to be able to spend more time with her. And that's one of the reasons why I tried to get into this real estate business, buying multifamily investments, because this gives me the flexibility and the lifestyle that I'm really looking for.
It's creating a lifestyle where you do not have to work that hard. And congratulations for finding a way to do that. And at the same time, you're creating income for yourself and for your future on a regular basis. And that's what people looking at retirement should be looking at, isn't it? Finding ways to create some monthly checks coming in.
Absolutely. And I can tell you there is obviously there are different avenues of investments, such as bonds, shares, and, the 401k retirement plans. But at the end of the day, you will not see the kind of appreciation that you get out of real estate as much as you could get from any of these. A lot of these, such as the bonds, like, of course, it is, if it is a government bond, I can tell that it is, yes, it's a safer bet. But obviously, you also get very low returns. It comes down to share market. You know how volatile that is. And there's a huge risk involved. And you have to follow the market. And honestly, sometimes you have zero control over it because somebody just tweets something and the market just falls the following day, right? It's the same thing. Like, so even your nest egg that you say in the US, which is the 401k, it is always in shares and bonds. With real estate, it really appreciates so quick. And the best part about investing in multifamily syndications is that when we invest in these properties, we actually negotiate the property purely based on not what the potential is going to be, but on the existing, what they are, what the current situation is. And you start from earning from day one. So, you have guaranteed income from, pretty much coming to you from day one. That's the beauty of investing in real estate. And the beauty of this is that the back end, when we hold these properties, we stabilize these properties, and when we sell it, obviously it would have appreciated over a period of time, and the back end is really solid. That's one of the things that we look for when we go after these properties. And when you see the returns, we share almost, depending on what kind of the project that is, we share almost 70% of our profits. It's a 70-20 split, 70-30 split, or 80-20 split sometimes. And that's where they make a lot of money. So overall, when we look at investing in properties, we look at properties where we can provide our investors a cash-on-cash return of. Now, I have to say, I'm strictly SEC compliant, because of which I cannot give you a definitive rate of return. But I can give you a broad range of pretty much what kind of returns to expect from us, because we don't invest in any properties where I would not be able to get my investors an annualized cash-on-cash return of approximately anywhere between 6 to 10%. And through the hold, we expect say we did normally hold it for like anywhere between 4 to 6 years or 6 to 10 years, depending on the project. We expect through the hold that they would get anywhere between 16 to 20%, which is an amazing return compared to anything that you can think in stocks and bonds,
Mm. That's very impressive, and well done for coming up with this form of investing. So what type of properties do you mainly go after?
I go after three asset classes as of now. The one is obviously multifamily rental properties, senior housing, and student housing. These are the three asset classes that I focus on.
And that's a growing market, I imagine, especially senior housing.
Yeah, so the thing is, see, there was a very good reason as to why I decided to go after these three asset classes. So I cater to pretty much from everyone from cradle to grave, I would say. But the way I see it is, multifamily, I invested in that is because everyone needs a place to live. And finding an affordable and well-kept apartment building is always in high demand. So that is one of the main reasons why I went after that one. A senior housing, if you really look at it, compared to many, many years, like, in 1955, the global average life expectancy was around like 49 years. And today it's about 72 years, right? So we expect by like 2040, the global population of those aged 65 and older will be like 1.3 billion, which is pretty much double to what it is today, right? So the baby boomers are definitely driving the demand. So that definitely is a place for that. Obviously, thanks to, and all thanks to the improvement in the medical, science, right? Life expectancies have risen. So obviously, that is definitely a very interesting space to be in. And obviously, student housing, it's a very lucrative one as well, because after the first year, nobody really wants to stay in the campus. They want to be outside the campus, and which is within but still be close within like 3 to 5 miles of the college. So I think that's also an interesting market to be in.
Hmm. And is there a area that you concentrate on? Are you all over the states, or is there particular areas?
Yeah, and now that's a very interesting subject. The beauty about passively investing, or as well as even investing in multifamily, it is very different than single family homes. So single family homes, you have to be there in person, and you have to cater to your tenants, personally. But the way we do this in multifamily or senior housing and student housing, we purchase the property and we interview and bring in the right kind of the best of the best in property management companies. And we have a business plan that we discuss with the property management companies. And we make sure that those things are taken place, so that everything goes according to the business plan. This gives us the flexibility to have a property that is cash generating and profit generating in any part of not only the United States, but we can always invest in other countries as well, if need be. But right now, obviously, my focus is in the United States. So I do have properties actually today in a 62-unit property in Omaha, Nebraska, as well as one in Wisconsin. That's the beauty of investing and passively investing. So how many of you could actually say that, hey, I have properties that are in different parts of the United States at the same time in different classes, right? Like if you were to, as an individual, want to make an investment in all of these asset classes that I was just talking about, how many of them can really do it on their own? So syndication makes more sense, as well as in passively investing in those. So you are working with a team of people without the hassle of having from your tenant, hey, my bathroom is broken or my toilet is blocked. You don't have to get your hands dirty in any of these things. Just sit back and collect the cash.
It sounds very easy to be involved in your projects. How long would an investor be in a particular project for? Do you have a minimum time frame? And also, what is the minimum investment that you are looking for from an investor?
It's a very good question. So it all depends from project to project, as I said. And yes, as you said, we make it very simple for our investors to invest with us because we do all the legwork for them. So as you mentioned before, we find the deals, we vet the deals, and we make sure that we put in the proper property management companies. And also, it's a team game. It's not a one-man show. We work with very experienced property management companies. We work with lawyers. There are three different types of lawyers that we work with and accountants that we work with to identify the property is good. We want to make sure that we buy a very secured property. And we don't like to have a property that is in a distressed kind of an area. We want to make sure that it is in the right condition. We make sure we do our due diligence when it comes down to the property so that our investors' money is in safe hands and make sure that they're getting paid for that one. So that's definitely there. To answer your question about how long do we keep it or hold it, it depends on when we buy the property. We look at it, how long will it take for us to stabilize the particular property and bring it to the market rent? Because what we do is when we buy a property, we want to have some meat on the bone so that, we don't want to, as I said, we don't want to go after distressed property, but we also want to bring in a property where we can see there is a difference between the existing rent and the market rent. So we try to stabilize it by putting in some improvements into the property and bring it to the market rent. And once we have stabilized it, we sell the property. So this takes anywhere between as less as 4 years to 6 years. Sometimes the sweet spot is usually within 5 years, I would say. But we normally give a range between 4 to 6 years because depending on market conditions, you always know that sometimes the market does go up and down a little bit. So we want to make sure that we don't create any kind of an anxiety to our investors by telling them, hey, we're going to sell this in the 4th year. We want to definitely give them that range of 4 to 6 years. So that's there. There are some properties that are of a longer hold. So that could be anywhere between 6 to 10 years. So what we do is have a good understanding of our investors. So if there is an investor who doesn't want to invest in a property which is about 6 to 10 years, then we don't even approach that investor with our investment plans because we know. I think the key to understand this one, Anne, is to understand your investors because at the end of the day, our goal is to do things what are in the best interest of our investors. Mm-hmm. Because our investors it's like the lifeblood for us. So we want to make sure that they are happy and they invest in other projects with us.
And is there a minimum investment amount?
Again, it depends. I have one property that where the minimum investment was about $25,000, and there was another which was of $50,000. And there's one that's in Texas where the minimum is about $100,000. So obviously, having a good understanding of our investors is key. So depending on project to project, it will vary. And there is always a minimum and a maximum that we have to make sure, because at the end of the day, we cannot have investors investing more than 20% of the raise that we are trying to do, because if they do, then we will have to include them on our papers. And that's not what we want. We want them to be investors, a passive investor where they can sit back, relax, and enjoy the earnings, not be a part of the daily grind.
Uh-huh. And is it possible for an investor, once a property is sold, that they can then stay in the mix of it and be included in another offering?
Absolutely. And that's the key, right? If you're a happy investor, you're highly likely to invest in my other properties as well. So we keep coming up with projects all the time. And that's why we always, and it happens several times, and that I get in myself, I get in situations where I have to sometimes tell my investors, I'm so sorry that I cannot accept your money because I'm almost done with this particular thing, but I can definitely bring you into my other project that I'm working on. But obviously, it depends on their comfort level and obviously the faith that they might have in me for giving them good returns. One of the challenges that we come in with some of the SEC rules is that we cannot talk a whole lot about our past achievements because there is so-called tombstone advertising, which is discouraged by the SEC. So so we can only tell them what this particular project that is there to offer. So those are the things that I can do. But yes, as soon as they're done with one, or if they have more money, say, for example, if they have like $300,000 to invest, but my one project can accept only about 100,000 as the maximum, then definitely I can help them invest the remaining 200 in another project of mine.
Mm-hmm. All right. Well, thanks for explaining that. It's great what you have created. You've given investors another option out there. And obviously, you've been successful. And it's quite an achievement that you've come from another country, worked hard, and then found a way to end up very successful. And you're giving opportunities for others to do the same. And in these markets that we've had very trying times in the investing market for a few years now, it's been hard to find opportunities to create that income at a decent return that we would like to see continuing on into our retirement. So congratulations. So is there any parting message you would like to leave the listeners with? We've been here today with Sanjay Hedge, and it's from Blue Ring Investors. And what else would you like to share or give us a summary of how they can contact you and be a part of this amazing opportunity?
Absolutely. And first of all, I would like to thank you and your listeners for taking the time to listen and for you to interview me. And also, they can definitely visit my website, www.blueringinvestors.com. And the beauty about this is if you go there now, and there is a white paper that I have put in, which gives you 9 good reasons as to why you should invest in real estate. It's free. It's definitely free. And this will also let them, give them an opportunity to subscribe to my other book that I'm writing on a complete guide as to how syndication works. So I will, if they have to download this particular white paper, they will have to give me their email address as a contact. And that way I can send out emails to them when the book gets released. So that is something that I am working on right now. It should be up and ready in the next couple of weeks. At the same time, if they are ready to invest, there is a pre-qualification form as well. If they could fill that out, that is another way of getting in touch with me. I will respond back to them immediately. And obviously, it also has my telephone number. I have my phone on 24/7, except on times when I'm flying and when I'm on podcast with you. But I'll definitely return their call if if I'm not able to accept their call at that time. And they can shoot any questions they may have for me. I'll be more than glad to help them.
Well, once again, it's been a pleasure having you on the show and getting to know you.
Thank you, Anne. Appreciate it.
You have been listening to the podcast show of Retire Well, Retire Happy with your host, Annie Nelson. For more information on the show's guests and being retirement ready, pop on over to my website, www.annelson.com.au, on Twitter, Instagram, and Facebook. Until next time, be happy, stay healthy, and help somebody.